what a lot of people do, I've noticed at least, is they will trade really well one week. Like the PA will be good. It'll be easy. Bias direction is very clear. What's going on, Pre? And then the next week will come along, and there isn't as much opportunity. They're just coming off a winning week, though. So think about the mental space they're in, right? So they just won, had a really good week. Whatever it is, maybe they even passed step one of a challenge. Um, Next week comes along, price action isn't as clean. Maybe let's say the higher time frame is building liquidity, so you're supposed to be sitting on your hands for a couple days. A lot of people don't or aren't able to do that because they show up to the charts and they want to take trades. They lack that discipline. So you passed stage one last week because you followed the plan and everything. The next week comes along, you're doing stage two, or like whatever scenario you're in. You're not staying patient. You're taking trades off plan. You're not focusing on capital preservation. All the hard work you just did the previous week, you'll lose in 1 week due to a lack of patience, due to a lack of discipline. It can go just like that. So just keep that in mind. I always say to everybody is all you need is 1 to 3 trades per week, and 3 on the more on the higher side for you to make some really good money. Okay. I mean, you guys have all seen. I have decent profit, but I mean, I'm going to use Abbott as an example. He can have a single trade sometimes for Abbott can bank him 20, 30K in a single trade. So think about when you get to that level, why on earth would he need to be taking 10 trades in a single week of price action, right? 1, 2, 3 trades maybe come along, and that's all you need. You make life-changing money. So the important thing is focusing on that right now, because even if the profits right now are smaller, it's just different perspective, right? You just have a smaller capital, and you lack that experience. So if you focus on that now, you'll be able to translate easier into the bigger numbers once the time comes, obviously. But yeah, brings me always back to capital preservation, guys. Really, really focus on that. Like when the conditions aren't probable, they're not in our favor. The higher time frames building liquidity, direction bias isn't clear, right? Like let's say we had just had a big move in the market. There's not a lot of liquidity in front of us. How are we going to build that bias for ourselves, right? So patience is so important. And yeah, capital preservation. If you're able to stay BE, little bit of profit, little loss in really shit weeks of price action, that's a win right there. Okay, because when the clear weeks, the easy weeks come along, that's when the profits roll in. Okay, but the profits only stay there when you manage when you manage those shit weeks, right? That capital preservation. But yeah, okay. So we'll jump into some charts here. So let me see. Euro, interesting. We've had some crazy price action, to be honest with you, this week. We had FOMC Wednesday, which ended up going whack. Starting off here on the higher time frames. Honestly, we can start on the weekly. I posted in the forecast that once we took these weekly lows, the next area I was looking at for sure was going to be this weekly high. So some simple stuff here we always talk about is you can see that we've grabbed weekly low, weekly high. So it's just this whole weekly range. You can see bottom of my screen here is September 2nd. So that whole candle, we grab that low and we hunt for that high. Go to that daily time frame, or even we'll go to the 4-hour. Really clean stuff beforehand, right? Look how we were building liquidity, okay, on the higher time frames, basically to the trending downside, and then we had a random bullish move up, okay, sweeping all of this, taking high out from the left to induce buyers. Think about the retail perspective of when this move occurs, okay, from A to B. Just a shit ton of buyers are now in the market, right? The intention behind this move, everyone's going to assume bullish momentum and stuff, right? So it's going to be buying pressure, all from these false order blocks, whatever it is. All these areas are going to be places that retail is going to be buying from. Now we want to see price below the low, okay, at the least. And of course, we have the low from the left-hand side that we end up hunting. Hopping over here to the 1 hour so we can open up this price action here. Same thing. Look.
Price building liquidity on the higher time frames. We finally sweep the low to the left. Causes a move up. Again, what's the intention behind this move? Is to induce buyers in the market. Sweeps out liquidity. This is a sell opportunity right here. You have equals down at the bottom. You can target. Or if you want to partial at the internal liquidity point, up to you. After this short occurs, again, what do we want? The low to go. Okay. After the low goes, you want to monitor this price action right here. And we've spoke about it, I believe, on the last webinar, but gorgeous bit of price action here. High taken out, lows taken out, right? So now the buyers are trapped. Look at this massive imbalance we have to the upside. This is going to be an area that sellers are looking to be taking entries from. Okay, we understand that's going to be a trap. Even if it does give reactions, just false, right? Just like this. Whatever, you can grab all of that area. It's probably just a higher time frame order block. Go to the 5 minute. And this is just a textbook entry we got here. So, I hope you guys, some of you guys remember this, but we'll mark this out. We had a run on liquidity here, okay? Important, why? It's giving us that liquidity block. Look what happens beforehand as well. Price takes the high, price takes the low, okay? So anybody looking to buy from this bullish order block in there, they get trapped after this low is taken out. Perfect. Now we have a liquidity block down here. Price ends up rallying to the upside, respecting the trap here. So anybody looking to sell here, they're getting induced right now. Perfect. We come down, print a low in the market, and then we get some simple structure here for retail. Look at this. High, low, high, taking out previous high. Now we have this level of liquidity here. Perfect. Now, anywhere below this low, buy. Okay? What do we have right down here? This is a liquidity block, so it's going to support that entry for you. Anywhere below here is going to be a nice buy. Whether if you want to just take it on this like wick tap here or on the actual entry candle down here, or again, just anywhere below this low. So it'd be anywhere below 1.10128. There's your buy. And look how we talked about that weekly low to weekly high. So of course, you're not really going to hold it the whole way, but take a partial and you hold the peanut to that weekly high. This is what it ends up looking like. And we end up hitting, what was it, FOMC. But yeah, the power of understanding that higher time frame narrative as well. So it ends up playing out perfectly. Again, we'll go on the 15 here. I believe the weekly, let me mark it out again. Just like this, yeah. So it plays out nicely. Longs down here, all the way back up. Friday, nothing really happened. I really want to go over this kind of ugly stuff. But I want to get into FOMC stuff that ended up occurring. Sorry, let me mark on some stuff from the left-hand side. Okay. So I had my eyes on this high. I can see that we've been respecting it for quite a while. Right here in Monday, Tuesday, and then finally waiting for FOMC on Wednesday. So if I go on the 15... what did FOMC end up doing? So, without a surprise, the market, big rally in New York, okay? Hunting all of this liquidity that we've built. If I just zoom out, just shit ton, obvious stuff here, right? Lots of liquidity, respecting the trap to the left-hand side. Why is it a trap? If we've taken out structural lows to the left over here, retail is looking at selling in these areas. Okay, so that's why we stalled here. Monday, Tuesday, and a little bit of Wednesday, okay? And then again, finally, in New York, massive rally up to grab all that liquidity, trap the sellers, and then a massive move back down. If I go onto the 4-hour, we can see where do we sell off to. We grab this internal liquidity that we left on purpose, okay? So I want to dive into this price action here on Friday. I was looking at potential longs here. Obviously, it didn't play out. This is a half an hour before market close. I was looking for longs below this low, okay? But like, look what ends up happening. We end up respecting it here once, and then over here again, move away. So right away, I knew, okay, This is now going to be used for the future. And I always say that in the Discord to you guys. You guys sometimes send me screenshots. You're like, oh, why did it not run all the liquidity then go? It's just simply leaving it for the future, right? So if I mark this low, I mean, look what FOMC ends up doing. Or sorry, after, post FOMC. It runs right for it. This was all left on purpose, and that's all the market does sometimes. So if you can stay patient and understand that, these are just going to be areas used for the future. Look at that. Obviously, this is not really the easiest entry to get into. I mean, if we had a liquidity block sitting below this, something like this, we could take this entry. Something like this, right? Because we'd have that liquidity block to support our buy. So as soon as the lows stabbed here, we take that buy like this, and we put our stop loss below the liquidity block. Again, there could be imbalances over here, so you can go down lower time frames to refine it, but I don't really care to do that. I just want to find that liquidity point, and I'll take my buy as soon as it's taken. So again, this is all, obviously this didn't occur, but if there was a liquidity block, this is how I would have taken the entry. Okay, does this make sense to you guys? If this did occur, of course. What about the LB above? Am I missing something? Which one? A buy here? Oh, the liquidity has not been taken yet. Look at these lows that we left on Friday. Equals. Look, structurally speaking, price came back down to this low, moved away. Price came up, came back down, moved away. Price came back down to this whole area here. And again, Friday moved away. Right, we can't go bullish yet if we haven't taken the liquidity out. Right? If we did get reactions here, I would assume price would have came down like this, false reaction up, then came deeper into the liquidity block to run this liquidity. Yeah, that's the risk of trading when not the liquidity, like not all the liquidity is taken yet, right? So sure, you can say, let's see here. This got respected. So you're saying maybe long below this? I mean, just from this perspective, look at this price action here. So you would have taken a long somewhere in here. I mean, just looking at this, does this look clean at all for like any sort of liquidity block? Wouldn't it make more sense if maybe there was a low printed like that? Don't get me wrong, maybe you could have found something deep in here on like M1 or something, and it could have came in, right? Look at my crosshair to the left, it could have came into it and gave a false reaction up, but most likely just a continuation back down, right? Because the liquidity is not taken yet. Just imagine all the buyers in this area right here. Trend line, Fibonacci, break and retest, whatever it is. We got liquidity sitting below these lows, and that's why it was hunted to the T here. Okay, again, taking the entry as soon as liquidity is taken is difficult in this example because we didn't have a liquidity block to take it off of. So I wouldn't be getting involved. Let's see if there was anything on the lower time frames. Also, I believe it's Asia, right? So nothing too easy. Yeah, there's just nothing to take an entry off of. Up here, nothing super clean. Yes, we have high taken, low taken, but again, there's no really liquidity block down here. Same concept. If we had something like this occur, we could take this buy for a continuation. Stop loss goes below that liquidity block. Okay, but it did not happen here, so I'm not really interested in taking anything like that. Big bullish move back up. In coincidence, we respect the highs. Talk about this all the time. Price has now respected the highs. We've taken lows here, over here. So these are all areas that retail is going to think, okay, I want a reaction here and possible continuations back down to the downside, right? So price has now respected it, engineered liquidity up here, which I now have my eyes on. Just like this. I do want to keep an eye on this as well, though, because this is not out of the picture yet. This low here. Since we've now traded above this high, it's not impossible for us to come back down here, take these lows out, then go. Okay. The thing I do want to mention though is today, I think, did I send this in the Discord? Yeah, I believe I did. But we grabbed the liquidity from the high over here, sell off to the downside, respecting lows to the left. All right, so if I just grab this ray, or even I'll use this. Price respected it once, went up. Okay, given this BOS for retail. Okay, BOS. Retail think this is a BOS in the market. They're going to be buying where? Down here. Right? Look at this reaction they get. I'll move back up to the upside and another BOS for them. Okay? Where are they going to be buying next? Here. So the intention behind this move from A to B was to induce more buyers into the market. Okay? And if we look to the left and dissect this PA right here, might be a little bit difficult because this is M1 and it's kind of squished up, but this PA we got right here is simply this. I'll draw it out so you guys can just see it a little bit more. Essentially like this. Boom. So liquidity's there, liquidity's right here, liquidity block, liquidity block. Okay, does that make sense to you guys? This is the liquidity left here. You have a liquidity block sitting right above it. So if I simply just grab the last high, again, obviously in this example, there's no imbalance here on the M1. You can debatably find one on something lower, like a 30-second, if you guys use that. I hope you don't, but you grab that last high, runs it, taps into the liquidity block here, and then big sell off to the downside. Okay, targeting this retail liquidity. So this would have been a good sell just like this. Leave a little room for your spread, whatever broker you use. And we are targeting like that. Perfect. I was looking for sells in that area, but I didn't see anything clear. That's unfortunate, yeah. This ends up playing out to a T as well. It's really nice. Okay, and obviously before we tap into this liquidity block area, look what price does. BOS to the downside, retail selling at the highs here. Okay, they get taken out. Boom, and then a big sell-off right to the downside. So, very clean, all the way down, and then at the lows here, some pretty clean stuff as well. Same thing again and again, guys, watch. So we take out all the lows, we run all this liquidity to the left. Boom. Go into the lower time frames. What does price do again? Obviously, I know there was no entries down here, but look. BOS. So we don't buy down here, obviously. Price takes at the low and just moonshot. Okay, same thing over and over. But yeah, any questions on this stuff, guys? Check this out as well. Is that a liquidity block? Where? A few left. Where are you talking about, brother? David? What are you talking about? Like a few left? Which? How to draw? There should be an annotation option in your menu area. Like a little pencil. It'll say annotate. Not on. There were no clear entries, right? I realized only if you have the Zoom app. This. I mean, like now you guys are forcing it, right? I mean, sure. By the book, yeah, we swept this low, but I mean, are we really gonna respect this? Yeah, we still have like all these lows here. The imbalance is down here. We haven't had that build up yet. So look what price ends up doing. It uses this as the build up on the M1. Early. Oh my god. Buyers in the market here move up to the downside, takes out the high, induces buyers. So now this is gonna get taken. Right, and to be honest with you, I'll just show you guys anyways. This is gonna be really hard to notice at the moment, but if I grab, look to the left, it's funny to look at after. I mean, I would not be taking an entry off this, but so you have all of this internal liquidity, right? This is all internal liquidity here. All these lows left. Sure, you can see here, you can argue that this here is a liquidity block. But I mean, it's just still internal liquidity, right? You want this liquidity taken out first. All these lows, boom, internal liquidity. Okay, so this gets taken, and yeah, right below it, it's crazy. But like I said, I would not be taking this in live time, but it's cool to look at after the fact. Taps right into it and goes. But the important, okay, yeah, become the early buyer. Where would you have taken an entry here? Even if you were looking at this PA here, monitoring, there was no entries per our system here, right? All we did was run the liquidity to the left, quick move up, taking out the highs. Where do you take it to take the entry? Oh my god, that's a crazy entry. Why not just wait for low to go? Simple stuff again. Boom. Buy entry. I don't even know. Dissecting wicks like that on the M1 is going to be a recipe for disaster. Just wait for something clear to come along. But then again, let's just say, hypothetically speaking, you did take this entry here. After these highs go, that's the next internal liquidity point. This is going to get run for, right? So manage your position. But yeah, highs taken, lows taken. So clean stuff ends up tapping into that area to the left. And then big bullish move back up. I'm going to let you answer that question, Steven. What do you think? What do you think, Steven? What do I always talk about the first step? What's the first step to taking an entry? Exactly. So, of course, you answered your question there. 11:20ish on euro. No, there's no entries on here. Unfortunately, the direction was perfect. It was textbook, but there was no lower time frame entry. Okay, in order for me to have taken an entry over here in this area, again, same thing. I just want to see a build up occur. Here's a build up, a run on that build up, and that's an entry. I'm not, please, guys, do not try and take entries on price action like this, okay? Go look back on my trades I take and I post in the Discord. I'm not taking entries like this. This is gross. Don't try and dissect M1 candles like this. Wait for something clear to form. Don't force things, please. Okay, that was it for Euro. Now, let's hop on the higher time frame to see what we're thinking here. Weekly ends up having a big bullish week. Okay, with the previous week spiking out this internal liquidity here, followed by this week here going bullish, taking out internal. Okay, so yeah, we'll hop on the 1 hour. Took out that high to the left. Now we've been respecting this whole area to at the highs, this whole wick, this whole liquidity block. I guess you can tell on the lower time frames, it's a wick on the hourly here. Now what I'll be waiting for is we got liquidity down here. Why is that an area I like? Because right below it is a liquidity block in the higher time frames, right? So I would not be surprised if we get a run back down and then maybe see bullish price action back up here. Okay. I mean, guys, I'm gonna save any like questions off topic right now. Let's just save for the end. Let me just continue on with price action. If you have questions on what I'm discussing right now, let me know. But yeah, any questions like that, let me just answer those kind of stuff, those off-topic stuff to the very end, please, just so I can continue with this. But yeah, now we're starting to leave liquidity on both sides of the market. So I talk about this all the time. When we have liquidity on both sides, instead of predicting what side's gonna go first, simply just react. Okay, react to what side gets purged first. So in this example here, again, we got highs left, we got lows left here. So is it likely maybe we can get a push down, false reactions, and then price runs all the way down to these lows, and then maybe see a bullish move up? Okay, so like I said, when we got liquidity building on both sides of the market, instead of predicting and taking unnecessary L's, stay patient and wait for one side to get purged and then attack the other side of the market. Okay, but this is, yeah, that's it on euro right now. Pound I haven't really been looking at too much, so I'm gonna put that to the side. Gold. Same concept on gold here. Yeah, Wednesday was wild across all pairs. Okay, so Wednesday. I believe, wasn't there? One second, guys. Let me check the Discord. No. Okay. That was a different day I was talking about. FMC long was clean on gold, didn't take it because of news. Yeah, it is what it is. Honestly, I don't remember the last time I've been involved in an FOMC move unless it was like partials from a previous entry. But it's just one of those ones where it's hard to be involved in. I believe some of you guys got involved in the Euro one, right? Where was it? Yeah, this one here. Sorry, guys, 1 second. I'm getting a phone call. Okay. I believe, yeah, some of you guys got involved with this one. Which is still, honestly, super clean as well. Just like, it's just one of those ones where I'm not probably taking this just because it's 11 a.m. It's going to be 3 hours before FOMC. Nonetheless, obviously ends up being really clean, right? Lows respected to the left. Ends up building all of this liquidity. So this is all a nice build-up. Big sell-off to the downside from A to B, leaving equals at the top here. All of this liquidity up here. Attack the lows. So just like I was talking about with current price action on EU. Instead of trying to trade all this, predicting what side's going to go first, look how the market runs for the lows. Easy. Run for the highs. Right? Obviously, like I said, FOMC occurred here, so it's not the easiest to get involved with, but let's just say FOMC wasn't a factor here. Once the lows are purged, just there's a long all the way back up, right? So directionally speaking, very, very nice. Just obviously with FOMC, just hard to be involved in. But gold, same thing. Wacky price action. I remember I was looking at, I think we were on the FOMC call, and I was showing you guys what I was interested in gold for FOMC was this. So we had internal liquidity ran over here. Okay, still lows left below it. That's why I was just looking for an in and out. So I also saw that price from here went long back to the highs. Okay, taking out previous highs. So I saw this as opportunity to take a long below here. Okay, so price has been respecting this low, and I wanted FOMC to spike below it. You could take a possible entry down here because we have a liquidity block to support it, and then you just take it to the highs. Boom, in and out, right? Obviously, didn't happen. We just went to the moon instead and left this liquidity. For a reason, obviously, we come back down to the lows. Grab these equals, this low here to the left, and finally dig for liquidity to the left-hand side as well. Just like Euro, I don't know if there was anything really too clean. This is late. This is Asia on Wednesday. Yeah, and just goes all the way up. So no entries on gold on the long, unfortunately. Let's see. I believe some. I don't know if any of you got involved in this long here, but same thing occurs. Right, big sell-off on gold, clearing the lows here, here, some stuff to the left. This is going to be a trap. Okay, so we purposely respect that. Thursday in London, false sell-off to the downside, grabbing internal liquidity. I'm not too sure if there was entries. Let's go ahead and take a look though. Okay, so initial reaction up, sharp move back up to the upside, grabbing highs here, this high, and internal points here. Look how the market retraces back to these areas. Okay, again, false reaction up. BO, like the retail sees it as BOS. Look how price even comes back down to this low. Here, we'll use a box. Comes back down to this low over here. Respects it, moves away. Running these highs. So this is all going to be a build-up. Okay, look how the market's purposely respecting all the lows. Build up in the market. So now you want the lows taken. Done. Now, in this example here, I think I was waiting on an entry, and there was just nothing too clean. This is very squeezed up on the M1. There's no time frame to go below, but same thing occurred. Same thing I would have waited for was just a build-up. This is going to be an area that buyers are looking to buy from because we took out this high. Okay, and I would have wanted to see price move away, and then I have an area, a liquidity point I would take an entry off of. Okay, that's what I would have waited. Now, you can argue and say that we took out this high, price came in, respect this low. I'm just not too bothered about waiting to take entries like that. I didn't take it, so it is what it is. I'll just wait and see if there's something else clean to come about. But yeah, nice entry here. Takes out, or sorry, nice directionally speaking at least. Takes out internal and then runs all the way back to the highs. Look how we respect the highs temporarily up here. Just again, inducing more liquidity into the market. And then finally going long. Now, gold is currently trading all-time highs again. So I will not be involving myself in gold again for now, at least. I want to see price develop, okay? Build price action. So just like last week, Friday of last week, we ended up trading here and closing out the market here. You want to wait for this to print, okay? All this price action, because you can actually build a story and trade intraday. Now that we're trading above highs, we need to see some sort of price action printed for us. Is that LB near 2551? Down here? 2551. Honestly, man, yeah, but like I said, the first thing you need to wait for is gold is at all-time highs. Like I said, wait for price action to print, and then you can build a story over and over. As of right now, I can see all I can tell you is we've just left these lows here. That's all I can see, and we're trading above this high. Okay, so I can't build a bias. I can't build direction if there's no price action in front of me, right? If there's no liquidity in front of me. So that's why, like, look how much more easier it is once this high respects FOMC high, trades lower to clear internal. Like, now this is so much more easier to build a direction with because I have liquidity to target up here now. So I can't just, I can't build a bias when there's no liquidity there, when there's no price action to go off of. Okay, Ryan. But yeah, I definitely recommend any gold traders just sit on your hands for a bit, please. If I can just zoom out. Look at this shit. We're literally on the moon right now, and God knows when this thing's gonna stop. Honestly, with the way the economy is right now, who knows? Okay, cool. I want to discuss my NOS entries. Okay, cool. Mark this out. Okay, so I took my entries here. Let me just clear this. Okay, perfect. So what was this on Monday? Yeah, it was earlier on in the week. NOS was super clean. It was clean. But yeah, just building. I mean, look at this price action here. This is nothing you really want to be trading. So instead of trying to predict that short to occur, all I want to do is wait for this move down. Okay. Once this sell move occurs, guys, I understand that all these lows are taken and stuff. I have this liquidity to target. It's so easy just to pinpoint a buy now and just be like, okay, now I'm bullish on this pair. I want to be looking for buys. So that's when you sit on the lower time frames, or you look to the left, okay, and start looking for entries. Instead of trying to trade this price action up here and trying to predict when this short's going to happen, which is difficult to do sometimes, you'll take a lot of unnecessary losses. Just wait for this, A to B. Now we want a price to go bullish. Done. Okay. But yeah, I had this marked out here. Simple stuff. You can see this low, respecting the low to the left, moving away. Cool. So I saw we had liquidity below this wick. I wanted price to come below it. Once we had this big sell-off occur, I understood, okay, cool. Big sell-off to the downside. We're starting to take some lows to the left, and I have liquidity left at the highs as well. So this is an easy long back up. Okay. I just got to be able to identify a proper entry now. So if I go on to M5 here, drag this over. Was this stock open? Yeah, stock open, big sell off to the downside. Okay, and then a rapid move back up, running this high, here. What does it do? It induces buyers. Same thing over and over and over. I want price below here now. Okay, so if I have, how can I do this? Let me use this. If I mark out this low, I understand that I want price below it, right? I want price here. So I mark out this low with this race. We look to the left. What's below it? And this is how I took my entry. Was a liquidity block. Okay, so this whole area essentially you could grab. What I did was I just waited for the purple line to get ran, which was that low we were just talking about. I believe Abbott did a breakdown on this, but yeah, we stab into it. We run that low I wanted taken because this is when buyers are induced, that build up in the market. We run down below, okay, mitigate the liquidity block. This is where I'm taking an entry, just like this. As soon as this is taken, okay, and my stop's going below. We screw around for quite a few, how long? 10:30 to about 2 hours. We're hanging around my entry, okay? But I remember that I'm bullish on this pair, so whatever happens in the lower time frames here is irrelevant. Okay, I've taken my entry. I understand I'm bullish. There's liquidity to target to the upside. I'm holding it, okay? Whatever happens in and around my entry, this is all to just screw with your mental, okay? Like I just told you, I hung around my entry for 2 hours. So if you guys are over on this price action on the M1, just pinpointing price action, okay, where it's going to go next. Okay, this M1 candle just printed. Maybe it's going to go down now. You're going to exhaust yourself, okay? And you're also going to play with your emotions. You're going to maybe mismanage your position, close early, force a break even, whatever it is. When you trying to break down this price action and pinpoint where price is going to go every single minute, you're just going to screw with your mental. Okay, so I understood. I took my entry. My stop loss is down here. As soon as we moved away and traded above this high, that's when I am. That's when I'm managing my position. Okay, so we've taken out this high. Also, the time of day, it's late New York. I'm fine to just be my position at that point. Okay, because look where my entry is. If it's gonna short all the way back down, there's some lows left here. It might as well just take me out. Okay, so again, once this high is taken out, again, that's like M5 BOS. I am managing my position. Whether it's partials, whether it's BE or rolling my stop, I'm managing it. And again, I am targeting the highs up here. Okay, and it didn't really wait for any sort of reaction, right? We didn't really come up here and react. Why? Because we already had all this liquidity. So there's no reason for it to give us a big like reaction to the downside. Okay, but simple, just like that. Buyers trapped. On the like to the left, lows taken to the left, and then you scroll into the lower time frames here to find yourself an entry. I seen that we had that rapid move here from A to B. I understood now I want price below here, and coincidence, right below the low, I had a liquidity block. So as soon as this guy's taken, I'm buying it. Okay. Let me leave this on. Any questions about this entry, this whole setup? Let me know. Clean? Yeah, it was. No questions? Okay, that's good news. Okay, now that I've covered what I've wanted to cover, well, actually, let me take a look at higher time frames. Okay, so we've now taken out this high. Any buys right now are going to be low probability. Okay, since we've taken out this high. So wait for price to build more PA for us, whatever it is. We've left all these lows as well now. So is this impossible to run to? No. But now, as of right now, let's just wait for more PA. Okay. But yeah, that's it on NOS. Gotta go, bro. Appreciate your time. Have a good weekend. You too, brother. Take care. Have a good weekend. I'll see you back on Monday. Okay, guys. I've covered what I want to cover. Is there any questions? Let me know. Now's the time to ask your questions, whether it's about what I've talked about. If there's any other ones, let me know. I've seen your IG videos take a more risky entry. What do you mean by that? They use a less lot. So usually, if I'm trading if price is trading at an extreme, and I'm trying to kind of pinpoint a bottom, I'm not going to add a lot of volume, right? So I'll draw out an example. You know what? We'll use. So if I'm trading essentially an extreme, I'm trying to not really trying to catch a bottom where I think that price is going to be printing a bottom. So let's just say, hypothetically speaking, I'm trying to catch something like this. I'll be using less volume. Okay, so whether that's a quarter of what I usually, let's say I use 1%. Maybe I'll do a 0.25% risk on an entry down here. Maybe if there was something to the left I was taking it off of. Okay, then when price starts playing out, then I get my actual confirmation where something like this occurs. This is now where I'm adding my remaining volume. So if I'm comfortable risking $1,000, if I'm comfortable risking $2,000, I'll add the remaining amount. Man, how do you partial out inducement area to still make most? How much you partial? Okay, this is just, we've talked about this trade management, but it's up to you. So whether some people like taking partials at a specific RR, I'm not saying don't do that. I don't recommend it. I like taking partials according to like what's reading on the chart. But it's all up to you. It's what you're comfortable doing. I might be comfortable holding a position full volume on gold for like 200 pips. Can you guys? Maybe not. Maybe some of you. I'm not too sure. But it all depends on what you're comfortable with. All I can say is experience will help with holding more volume over time. So at the very beginning, it's going to be uncomfortable to hold 75, 90% of your position for a longer target. Okay, but as you do it more and more, and as you grow, and as that confidence grows, you'll be able to hold more and more volume. Okay, and obviously the profits will be 10x what they used to be. But that didn't just come just like this. Okay, that came over time. I'm now more comfortable holding more volume to these targets, but yeah, that's my best 2 cents on that.
When price is creating a buildup, most must hit break structure to count as a buildup. So Ryan, we have there's a whole section in the WAP called buildups in the market. Okay, so whether that's a channel, right? You have trend line. You can also look at this as retail, right? A high taken out, low respected moved away, high taken out, low respected moved away. So there's a couple different ways of looking at it like that. Or you can use EU as an example today. Really nice. We had price take out this high. And then we respected retail, moved away. This is what we call buildup. There's a buildup of liquidity. Okay, we move away. Look how we build up here, trap move up, and then move down, the correct direction. Okay. Can you teach me how to trade with engineered liquidity? Engineered liquidity trades are like we talk about, they're like less probable, right? So let me draw like a little diagram here. Okay, so let's say we get something like this, low taken, maybe something taken from the left hand side, and we start moving bullish. Okay, let's say we leave lows like this. Now let's say this perspective here is on the higher time frame, so like H1, H4, so it'll take a little more to play out. We understand this is a liquidity block, okay? Now the thing about this situation is we also understand that trading from these areas are low probability. They're not wrong, they're just low probability. They can provide reactions in the market, okay? But sometimes they can provide a reaction and just continue up. So my 2 cents on this is just stay away, okay? There is more than enough opportunity in the market to not trade with engineered liquidity. So there's just no point. In my opinion, I don't take these trades. I never will. In the past, when I was building the system and stuff like that, I was trying to figure everything out. So I was taking these kind of trades, but I just learned that you take a lot of L's, unnecessary L's. Instead of just waiting for the market to sell off, okay? The type of entries I can actually explain to you that I don't mind is I won't take these. I think I explained it last week, but I don't mind taking trades like, for example, this. I don't mind if we short in here, okay, and go lower. I don't mind taking these. I don't like taking these, if that makes sense, okay? I can see here that we've built up liquidity. Perfect. False move up to induce buyers. This could have been a liquidity block here. Nice mitigation. And sell off down to the lows. So I don't mind taking these ones, okay? But I don't like taking these guys. Does that make sense, Naeem? Yeah. That's just, in like probability speakings, the extreme ones are just, I don't like. Okay, because it can easily just blow through. Happens, yeah. And you just gotta sit on your hands. That's it. If there's a day or two of no trades, there's a day or two of no trades. But yeah, and then obviously when we come down here, this is an easy one. Back up. Any other questions, guys? You have to always remember, like, we talk about, like, the BOSs that occur in the market, right, when the market comes down. And now you guys are interested in buys and stuff. Essentially, this is like a pattern that happens over and over, right? You have high, low, high to induce buyers, and they get trapped. You have to also remember that the market is all about liquidity, right? So you always want to prioritize liquidity first. So a lot of people will be forcing themselves to look for buys right now. But if there's just no liquidity up here yet, we won't go up there right now, okay? So always remember, prioritize liquidity. Wherever liquidity is, we're most likely where the market's going to run to. Just because there's this pattern in front of you doesn't mean the market's just going to respect that pattern we see over and over and over, if that makes sense.
Make sure you're always prioritizing like that logic, that liquidity in the market. This week's winning streak came after 6 trades losing. Only this week I made all my losses back. That's good, brother. Marco, when do you decide when there's enough build up in the market? I just want to see anything we talk about, right? Like, I'll just use diagram as an example. One scenario I see happen over and over and over. Let's say the market comes down. Okay, we have the BOS here. We want to see price below. Okay, sometimes what we get is like price will edge its way down because it's inducing buyers here. Okay, and then we take the low, and then there's a big bullish move up. What should we be waiting for now? What would you guys wait for? Exactly. Okay? The whole point of this move here is we've just taken out this liquidity. Okay? That we were building on the way down. This was the build up on the way down. Then we've now taken out that low. That's what's fueled this move from A to B. Okay? After that occurs, okay, we get a sell off down to the downside. Maybe you get a nice little entry on the way down. Boom, price takes it out. You take a sell position and you ride it down. Okay, maybe it respects the low once more, and then finally takes the lows. Okay, now that this has respected something to the left, it's most likely going to hunt for another level of liquidity right here. Right? Let's say it now does this. Takes that level of liquidity, runs higher. What do we want to wait for now? Not a build up. The high's just been taken, right? So we want the low to go. Exactly, low to get taken. So now the low goes. Look, after all this happens, look what we now have to the upside. So now this whole pattern that you guys see over and over is essentially now it's ready to long. Do you understand? What makes me question to take an entry if there is a build-up below? I don't understand. Okay, this is a very... Oh. How do we determine the high taken out so that we wait for the low? This what? This is like what the whole system's about. We do not take trades here. Right? Like why would you take this? A buy in this... let me use a red box. Why would we buy there? Why would we buy here, David? We've just taken out this high, so the retail sees it as a BOS. So what can occur sometimes is we'll respect it, move away, but now we want the low taken. As simple as that. Just understand that. There's literally nothing else to it. Just understand that now that we've taken out this high, expect this low to go. Even if there's false reactions, stay patient, because this is just going to be engineered liquidity. Would I wait or take it as the model is presented itself? Can you Yeah, sure, Adam.
Hey Marco, hope you're good. Sorry, I don't think my question's making sense. So you know how we're identifying the build up, then the trap, then look for an entry. It's kind of like the most recent video you went through where there might be a build up, but the higher time frame might not be ready to move, even though the whole model presents itself on the lower time frame. How would you know when to like wait for that? Like if there's a build up way below?
I don't understand. So like this whole concept, this whole scenario here, let's just say for example purposes, this is the M5, okay, and this happened over Asia, London, and New York, okay, and I'm bullish on the higher time frames already. I want price to go up. This is just a bullish scenario that's going to be happening. This is what occurs. But like
This can happen on M5. This can happen on H1. This can happen on every single time frame. I just want you guys to understand this whole drawing, right? We run the liquidity, we move higher, we take out this high. Now we want this low to go out. You can look for a sell on the way down. Okay? It respects this low. Use the red box. Respects the low. Why? Because we've taken out this high. Retail sees this as BOS, so we get that false reaction here. Moves up. Okay? Printing us actually an inducement high. Then we get a sell-off, clearing the liquidity here. Okay? After we clear that liquidity, we get a rapid move from A to B. Why is this important? It's induced buyers into the market. This is now going to be a trap. This whole area. So this is a build-up. And then from here to here, we clear everyone out. And if you look up, we have a shit ton of liquidity to target now. So let's just say we get something like this. Sell off, buy. Okay, boom.
Yeah, bro, perfect. That makes so much sense.
Alrighty. One sec. After understanding IE concept, realize that price does the same thing over and over and over day. It literally does over and over and over. It just happens. It happens on all time frames, right? So obviously, if it's happening on H1 or H4, it's going to take a longer time to play out. But then obviously, it always happens in lower time frames as well. So you see it over and over and over and over. David, do you understand? Sorry, can I draw? Yeah, what do you want to draw on? Can I clear something up? Missed your message, my bad. What about that? How do we turn it back to here? Okay, so yeah, what about this drawing here? It's just any high. If there's a high taken out, right? Like, watch. Some people get psyched out when this occurs. Can you remove your drawing for me? Some people get psyched out when this occurs. Right? Comes down, respects the low. Moves away. Boom. Now buyers have now been trapped. Okay? Sometimes this occurs. You'll get another move up. High taken. And then the low goes again. Okay? Now all you want to wait for is this to occur. A build up. Okay? And then since we've taken out this low, this is a trap. Since that's a trap, and essentially it's a liquidity block, it respects it temporarily. Rapid sell-off, essentially a false sell-off, into the low, liquidity block, buy. You have all of this to target, you have all of this to target. This all happened, okay? This all happened because of, it literally started from this. Exactly. Yeah. No worries, brother. No worries. Mateo's got his hand up. Oh no.
What's up, bro?
What's up,
quick
man?
question. This kind of happened to me on NAS today. So I'm trying to annotate. I'm on my phone. Sorry.
You want me to go to Nos?
Yeah, no, honestly, this is perfect. Your diagram's perfect. So yes, low taken here. And then you said there was I'm zoomed in right now, so I can't see, but there was a liquidity point to the left from this area. So let's say it has respected it. But then on its way up, it doesn't clear this high, respects it, build up, comes into the, takes out the early buyers, and then moves up from there. But there is still liquidity resting from the far left. I was just because the model was there. It proved everything that I wanted to show. enough build up and the timing was right. It was just after 9:45. I was like, okay, but then there was a small liquidity pool from the left that was still coming from the left. So I was like, do I take the risk? Do I just smaller position, maybe potentially get wicked out, and then wait for a fuller size, or do you just treat it the same as you would?
Yeah,
if that makes sense.
You know what? Let's go directly to the example because I know what you're talking about.
Okay, perfect.
Do you remember what time it was at? Or was it NOS or
How do I get rid of
US30?
it? It was NOS. It was NOS. Yeah. Get rid of this. There we go.
When was it?
Okay, so took the high from right here, that high right there, and then you zoom in. Oh no, sorry. There was still like it wasn't anything major because there was no buildup with it. But then it kept spiking the high right after 9:30. Would make a little bit higher and then a little bit higher twice. And I was like, okay, so it could still be pushing towards increasing, like not that being the major liquidity block. So when it did spike up, and then this is the final one right there, and then took the inducement high right there, I was convinced because the model was there, but there was still, if you zoom in from the left, there was a little bit of like a wick to the far left that I was still concerned about. That I was like, oh, maybe it still could run a little higher before printing the final liquidity block. Like just if you zoom in, it's like right, this high right there.
Yeah. Okay? So like you're just talking about something from the left. If you want to get really intricate with it, you can. Let me break this down. Okay, so I can see already. I don't even need to go to the M1 really, but I can see before taking out this high that we've got marked out. This price action right here is probably like this on the M1. Okay, so look at this buildup of PA, the internal liquidity we had before taking out this high. That's why after we took the high out, rapid sell-off down to clear what? The buildup that we had here. Okay, but why is this important? Since we've now taken out this low, BOS to the downside, retail sees that as that BOS. They're going to be selling below the high. If I go on the M1, we now want price above here. Okay, now if I look to the left, it took also, I mean, I wouldn't be marking this out to be honest with you, but it also took out this. Right? And then maybe there was something here on the lower time frames that it tapped into on the M1 or whatever it is. But I believe, you ended up taking this. This is just what you want to be looking for after the fact. There's always going to be a little chance that maybe it induces higher once more, and that's the risk you need to be willing to take when you're trading the extremes as well. But just wait for the confirmation. Low taken, high taken. And if you're still not too sure about taking it above this high, sometimes I've seen people do, I've also seen Abbott do it sometimes, is he waits for just a rejection below. So after this high is taken, he waits for this candle to close as a rejection kinda. He takes entry there, stop loss above the liquidity block to the left-hand side, and then rides it to his target.
Right. That makes sense. I'm also trying to get rid of that drawing, bro. I've been trying like 100 times. It's not going away. I don't know if
No worries. There should be like a garbage can. Here, actually, you know what? I can do it myself.
I have the eraser. I keep going, but it's not. Anyway, weird. Sorry. Thanks, bro. But thank you for explaining that. Appreciate it.
No worries. Got you, bro. No worries. But yeah, ends up having a nice sell-off to the downside. But yeah, same thing, guys. Like we just marked out. Highs taken. Okay. Now we want the lows taken at the least. Okay, and if we look to the left-hand side, we had this wick we've been trading in. So obviously we want that taken as well. Okay, if I hop on the hourly, you can see what did it tap into on the higher time frames.
Fucking crazy.
Liquidity block, yeah, right there. Taps into it and runs away. But yeah, I just want you guys to understand, this is the important part right here. The highs taken, the lows taken. Okay, because this induces buyers in the market. This whole buildup occurred, okay, was all on purpose, just to get ran. And then the correct move happened. Okay. As for lower time frames, I'm not too sure. Yeah, nothing over here. Here, no. Nothing. Okay. Anyone else? Any more questions, guys, before we shut this down for the... Can I draw on the diagram? Oh, fuck. I don't have the diagram anymore, bro. The one I drew up before? I don't have it drawn out anymore. Oh, wait. Was it on a different chart? Let me check. Yeah, it's gone now. I deleted it. Shit. What's your question though?
Okay, I'm gonna talk. Yeah, I have
Okay.
a question. After the price take liquidity, for example, for example, this one, the price comes like this and create liquid trap right here, but break it. So here is a liquidity block, but now it becomes a liquidity block. And the price comes here, respect it, make a new break of structure. Now this one is a liquidity, and the price takes here. We can buy right here or not.
No,
So
no, 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 no. It also depends. Like if we do something like this, so that's a good question. So if we have to a level of liquidity like this, okay, we move higher, then we run it. I'll draw it out like you. And then we had the BOS here. Okay, so like you said, we don't buy here. So I'll make this red. Price comes down, respects it, and another BOS to the upside. Again, we don't buy here. Okay, what is this now created? Liquidity. So what occurs sometimes is price will come down and actually run this low, okay, and then just have a false reaction up, but it's just gonna go further down, okay, because this is where the liquidity is, below this low. You have to ask yourself, why did this low print? It printed because of this area to the left-hand side. This is where the liquidity is going to be. But like I said, a lot of people get psyched out because they see a false reaction like this, and maybe they're buying here now. But no, no, no. You want to wait for that low to go. Because it'll come like this, and then just take all the lows.
yeah, makes
All right.
sense.
Cool. Okay, guys. That's it for me. Good example, I have several losses. Yeah. Yeah, you just gotta stay patient, right? Trust the system. Okay, guys. If anyone else got last minute questions, let me know. Again, like I always say, it could be chart related, it could be psychology, any tips, challenges, stuff like that. Let me know. But if not, we'll log off for the weekend now. I think I got some content I'm going to be recording, so I'll let you guys know in the Discord when I post it. But yeah, if not, guys, that's it for me. Hope you guys have a good weekend, and I'll see you back. Usually we don't trade. If you guys trade London, you can trade London. I'm not saying it's bad. It's actually a great session to trade. I just don't trade London because I live in Canada. So London Open is 2, 3 a.m. for me. Love the calls. Always appreciate the love, brother. Thanks, Mark. Have a good weekend. You too, bro. Enjoy the weekend. Nice one, guys. Okay, cool. I'll see you guys all back in the Discord Monday. Yeah, I hope you have a good weekend. Take it easy. Ciao, ciao, ciao.